Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard, and best of the season, John.
Jim, best of the season to you and our audience.
John, what do you think affected the broader resource sector in 2018?
You know, the year started off on a pretty optimistic note. The various economists were saying that emerging markets are on an uptrend. The tax cut to 21% for the federal rate in the United States was going to stimulate the U.S. economy. Metals were trending up in the first half, but everything began to change in around June when Trump made good on one of his campaign promises, which was to start a trade war against the rest of the world. And this realization that he was serious about collapsing globalization, the international rules by which trade disputes and that are settled, and just start declaring countries as national security threats and throwing up tariffs against aluminum and steel against allies like Canada and Europe, and then ultimately going after China. And ironically, the deficit with China has managed to grow this year rather than decline. But the resource sector almost immediately said, this is not good. We saw the metal prices trend down. We saw then the company prices, the producers, start to trend down. And they are behaving like the canary in a coal mine. They are anticipating a major economic slowdown in 2019. And that really, on the broader scale, was the big thing that happened this year. We have not resolved this. Right now, the oil sector is getting hammered. They were up to $75 a barrel until October, and then now they're below $45 a barrel, which can't be good even for the cause of the price coming down, which is the shale oil revolution in the United States.
What kind of trigger could end all this party?
Well, the big party that's been going on while the resource sector was trending down is the general equity markets have continued to trend higher and higher and higher. Now, that's not the case in other international markets where downtrends are already in place, but the S&P and the Dow, they've all continued to trend higher. And part of the reason is that with this huge tax cut that allowed the repatriation of profits stored abroad so that they don't get taxed in the United States at 35%, that started to come home. And of course, the logic behind it was that, yes, that money is going to be invested in production capacity in the United States, stimulate the real economy, but instead, most of it ended up going into share buybacks and dividends, which of course put money into the pocket of investors, pension funds, institutions, and that helped stimulate the general economy. But the sort of hardcore building, that has not taken place. And the other thing in the background is the FANGs, which have been leaders in the market, they finally hit the wall, and there is a technology backlash about the way big data is using personal information. So in the past few weeks, even the American equity markets have now broken their long-term trend lines on the downside. New York was down another 400 points today. So everything looks like it wants to validate what happened in the resource sector 6 months ago. And of course, the precise triggers, we have a situation now where, because another one of Trump's campaign promises haven't been met, building this giant wall that Mexico was originally going to pay for, but that was just Trump's idea, not Mexico's idea. He's threatening to shut down part of the U.S. government if he does not get his way. And now he's pulled his troops out of Syria, unleashing all kinds of potential chaos over there. And Jim Mattis has resigned. Everybody is aghast. What is going on? So it seems like the White House, with its endless revolving doors and its incoherent policy, which nobody understands what it's going to be tomorrow or next week. All of this is combining as a sort of collective trigger to push this general market uptrend into a bear market. And of course, the technical analysts are looking at all this. They see now, okay, the reason for the market breaking down, it's been obvious to us now for a year. Now it is happening. So in a sense, the trigger, the detonation has already been set, and we'll have to see how it plays out during this last week of the year, and then heading into the new year, how low it will drop before it stabilizes and everybody rethinks, okay, where do we go from here?
We'll have more with John Kaiser right after this.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the Pink, symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Welcome back. We're speaking with John Kaiser. John, how has gold done this year, and what can we expect in the new year?
Gold started off on a good note, but then it tracked the reversal of the metals in general in June, has done fairly poorly, got to even below $1,200. And part of the reason is that the raising of interest rates in the United States, which began in mid-2015 under the Obama administration, it has continued. And this has helped drive up the U.S. dollar against other currencies. That has partly offset the pain that the tariffs and that were supposed to cause for China, because the U.S. dollar has been rising. And of course, the rule is when the U.S. dollar is strong, then gold should be weak. So gold has been weak, and the fear of higher interest rates when you can put your money into T-bills and savings deposits and finally make at least some interest return on it, whereas you never get anything for gold, all of that has worked against gold. But gold has done quite well in the past few weeks, and people have been afraid that this is going to be like 2008, when the financial crisis started to unfold, and gold ended up being sold because of when people needed liquidity, they needed to sell something that could be sold, and there's always a buyer for gold. Not necessarily for any bonds, because of the ability to get paid back comes into question in any financial crisis, and so this has kind of held gold back. But I think we're in a different situation this time. A significant pullback in the equity markets really doesn't have to do anything with the kind of financial house of cards that had been built up in the 2001 to 2008 period. I'm actually quite optimistic that if this market continues to deteriorate in the big equity market, we will see gold not get hit, but actually start to rise, because this time nobody's really looking at the United States as the savior. That role seems to have been forfeited by an isolationist policy that Trump is pushing. He has alienated all his allies. He's declared a possibly even a Cold War against China. This time, I think gold is going to trend higher, and it's probably the one saving grace for the resource juniors heading into 2019.
We'll have more with John Kaiser right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Welcome back. We're speaking with John Kaiser. John, what affected the junior resource sector the most in 2018?
There were two bubbles which really hurt the junior sector. One was the blockchain, Bitcoin, cryptocurrency bubble, which really got rolling last year, about the middle of the year. And then there was the cannabis bubble, which had been sort of growing for a few years earlier than that. Both of them did extremely well during the first quarter, but the Bitcoin crypto bubble, it basically has popped. And that was just a parasitic on money type of a story, a momentum trade that sucked in a lot of people. Now with the price of Bitcoin, almost every Bitcoin mining operation is losing money earning Bitcoins. They're even worse than the actual mining industry, who actually thought it was going to be different. The cannabis bubble had a second wave starting in August, the anticipatory run-up to the legalization on October 17. It has pulled back sharply since then. To some degree, this is, helped along by the weakness in the general markets. People are saying, okay, it's now legal in Canada, time to see profits. But I think the cannabis bubble, which of course sucked all the oxygen out of the room for the resource juniors, it will have another leg because the story's now shifting to the future possible legalization of marijuana in the United States. And the Canadian companies are the staging ground. It is the ones the big food and drink companies are putting big investments in as they anticipate all kinds of cannabinoid products that they'll be selling into the United States when it gets legalized, which means all the losses that will be showing up on the bottom line will simply be dismissed as well. These are market development costs because the U.S. is a 10 times bigger market, and where the U.S. goes, suppose the rest of the world will also go. So these two bubbles, the Bitcoin one is pretty much dead at this stage, but the cannabis bubble is still one that can continue to suck away oxygen. But even if it does subside and stay away for a while, that is not going to help out the juniors. The juniors need help from a rising gold price, and they need help from new discoveries that rekindle the public's imagination about the wisdom of putting risk money into exploration juniors.
John, I hope Santa is generous to you and your family.
Well, hasn't been in the past year, so I've tried to be good, and I've changed my setup. I've got a special deal for past and present subscribers, $350 a year and $450 a year for everybody else, and $450 starting the new year. I've got a couple hundred bottom fish already teed up in my website, and I've got some fair and good spec value stocks teed up, and my favorites are going to be released on January 1st. So I'm doing everything for at least next year to have a nice stocking from Santa.
We've been talking with John Kaiser, his website kaiserresearch.com. I'm Jim Goddard. Best of the season to everyone.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.